Good morning, everybody. It's the 21st of April. We are Signal Centre Talking Ball. I'm Joe, joined by Steve for the last episode of the week. We made it, Steve, to the end of another one. How are you doing this morning?
Yeah, not bad, mate. Yeah, it's been a bit of a rough week, I feel, for sort of like our trade ideas anyway. Hopefully
Yeah, I
we can
mean,
nick something out of it today because it feels like there's a little bit of movement going on.
yeah, there
It's all
does.
about the timing, though, isn't it?
Yeah, I mean, obviously, yesterday we both went short of indices, and they were looking pretty nice at one point, but markets are pretty volatile at the minute, and it bounced back, which is ultimately good for equity markets, but not so good for our trades. But we'll come on to that in a bit. Let's go through the headlines first of all and see what it is that's been moving markets over the past 24 hours and try and break it down a little bit. So first up, Philly Fed index slides further. The numbers yesterday deteriorated to minus 31.3 for April from 23.2 previously. This was weaker than the consensus forecast of minus 19.2 and the eighth successive negative reading and the weakest reading since May 2020. So clearly from a macroeconomic perspective, there are still some concerns in the economy, and that is having an impact on the markets. Yesterday, we also had jobless claims that increased to 245,000 in the latest week from a revised number of 240,000 previously, and was slightly above expectations of 240,000 and close to the highest level for 8 months. The Fed continues to back a rate hike in May. Despite the weak data, there was no shift in the Fed rhetoric, with continuing focus on inflation rather than economic growth conditions. There are very strong expectations that the Fed will push ahead with the May rate hike, with a potential pause beyond that meeting. In terms of what's happening with the ECB, there are divergent opinions in play at the moment. The ECB council member Knott stated that it was too early to talk about the pause in rate hikes, and the minutes from the March policy meeting commented that a number of members were concerned that inflation forecasts were too benign. One of the other members, Visco, however, stated that the risk of doing too much is at least as much as the risk of doing too little. We had UK retail sales out. We saw numbers decline there, down 0.9% for March after a 1.1% increase previously, and compared with the expectations of a 0.5% decline. Consumer confidence, however, recovered further for April. So again, some mixed signals in the UK economy. And as a result of this, the Bank of England member Tenreyro stated that they maintained a dovish stance, with comments that the bank may have already tightened too much. So markets remain convinced that the central banks will increase rates at the May policy meeting. Close to 100% probability now priced in that that will be the case. Today is another important one for the markets. We've got a whole raft of PMI data points due out, which will be the latest business confidence data released in the Eurozone, the US, and the UK today. The latest data on growth, inflation pressures, and relative outlook between the countries will be key elements in the data. All manufacturing releases are expected to remain in contraction territory, so that's below the 50 number, with limited expansion for the services. So very mixed out there at the minute. Talking about further interest rate rises, no talk of them pausing for now, but the economic data that's coming through is weakening. But of course, inflation still remains persistent. So, Steve, let's take a look at some charts. If you can bring up the crypto ones to start, we can see there it's been a pretty nasty week there for Bitcoin.
Yeah, it has. It's looking at the weekly chart just to give you. I mean, obviously, it does slip into the weekend, so there's maybe plenty of opportunity to drag itself back. But it's a bearish engulfing candle at the moment. So last week's gains have all been given up, and also we're now at we're below the close of the week of the 13th of March. So yeah, very, very interesting last few days in Bitcoin. That resistance band of resistance that we had highlighted, it was a big band. Oh, okay, that's fair enough. Between about 28,800 and 32,250 has held. As long as we maintain these sort of like more negative levels into Sunday night. Obviously, still a few days to go there. We did have a measured move target for this inverse head and shoulders formation. That was around about 35,000. Do I need to draw it on there? There you go, 35,000, just above there. But we have stalled at 31,000, reversing sharply lower, trading at 28,000 now. So it's given up that attempt higher initially. Ethereum also made highs we haven't seen since May last year, and although we haven't completely engulfed last week's price action, we're not far away from it. XRP the same. We made a new high compared to September's swing high, but we have sort of like this level, and we can sort of like highlight on the chart now because it looks like quite a decent band. In fact, I'll paint a little bit because it will be a band of resistance there in XRP, and obviously, yeah, back targeting the sort of like the week of 27th of March. So overall, cryptos really looking a little bit sick going into the weekend. Taking a look at commodities, this has been a little bit more interesting. Gold looks to have stalled at 2050 and reversed from there. That was about $25 short of the all-time high. That was last week. This week, we've continued to the downside. So we are posting this evening doji star formation on a weekly chart. That should be quite a sort of like a decent signal for overall momentum. Now, really looking at the dollar, we know the dollar's trading around 102 on the dollar index. So really sort of like taking that as a real pivot point between 101 and 102. If we can manage to maintain levels above 102, then I think there's going to be a little bit of weakness filtering into these these dollar-based commodities. Looking at the daily chart, we can see yesterday or overnight we've given up Thursday's gains. We've got this like small moving average. It's only a 9-bar moving average, just a little bit of an indicator of really short-term trail, ultra short-term trend. And we have sort of like given up gains already. We're back down to that 1983 level. The weekly low is down at 1969, and we've got that reverse trend line coming in just below there at 1967. So definitely a few levels to watch. I was looking at this as a potential for gun to head trade idea. 4-hour candles are looking negative. They're below the Ichimoku cloud as well as the hourly candle, which has dropped below there in the last hour or so. So maybe a bit of a negative twist coming into the market early doors before these PMIs. Looking at crude oil also, I was looking at our Acuity new sentiment tools earlier, and there's a few humdingers out there which might line up and give us a little bit of opinion on our gun to head trade ideas. I think we had a 90% confidence in a move lower in both NASDAQ and oil. So that sort of like has sort of made my mind up because I went short of NASDAQ yesterday and got stopped out, and it's back to where I went short. So I'm a bit frustrated with that one. As we said, we had this. Let's move this here so I don't have to just redraw. We had this gap on the charts on WTI crude oil, and the low from Monday, the 3rd of April, which was around about $79, we said was pretty key. We did have a little bit of a retest on 11th of April, didn't quite get down to that low, but it did sort of get close and reacted higher. We ran into the 200-day moving average and also horizontal resistance, where prices moved above, closed above, but gave up the gains the next day. So that was almost like a bit of a roadblock in the march higher. We have been saying, if we manage to break down below that $79 level, we should get a fast move lower, and that happened yesterday. We can see sort of a high of the day, 78.97, which is the exact level that was the low from that gap higher, and it was one-way traffic. And we look like we're going to continue that today, and the gap on the charts would be down at the high from the week of from 31st of March, basically 75.72. So only $1 away. So that should get filled pretty quickly, I think. Brent crude oil doing the same thing. We've seen the break down below that neckline. That happened a little bit earlier, actually. That happened on Wednesday. So that was a decent indication. We closed below it on Wednesday. So we normally, when you do get these gaps, it does create some kind of vacuum where there's been not a lot of trading taking place in there, so not a lot of support if it does break down into it. The same on the upside. Natural gas had a move up to 250, so that looked pretty good on this chart. Got up to just above 250 and then posted a bearish outside candle. That was Wednesday. Yesterday's price action was a bit of indecision yesterday, and also we have got a gap on this chart as well, down to 224. This is on don't know which broker this is. Your broker may have a slightly different price, but you should see these sorts of charts as long as they don't draw a sort of that candle filling that gap. So be careful of this. You might not see this sort of chart formation on all brokers charts, but yeah, so we still have a level of support 227.70 down to 240, and yeah, just sitting above, just sitting below it. Someone jumping on my bandwagon, Joe. But I've done with commodities. Maybe that was you.
No, it wasn't me. I didn't touch it. So maybe there's somebody else using it.
Yeah.
I've got the same issues as you'll see here. I've been disconnected. But let's get on to the foreign exchange markets. Let's take a look at the dollar index. So still looking for this wedge to potentially complete. Yesterday we saw a bit of weakness. We do have some resistance in place here at 102.23. That for me is still the key level that we need to break to confirm this ending wedge. And if we do, given that we saw these lows retested recently and do a pretty good job, that could potentially trigger a decent move to the upside. Obviously, PMIs are going to be very important for this today. If we see that the numbers, well, we're expecting them to still remain in contraction territory, but if they come in worse than expected, suggesting that we're actually getting more contraction in these major economies, then that could prompt a move into the US dollar as a bit of a safe haven, and it could also potentially knock these equity indices as well. Looking at it from a technical perspective, I do believe that maybe we are going to see a bit of a rise in the dollar index. That would be my favorite position, given that this support level at 100.82 has held so well. But clearly, overall the trend remains bearish for the time being, so we do have to keep that in mind. Obviously, if we get a break below that level, then it would suggest that we are continuing to see money pulling out of the dollar index, and therefore it's got to go somewhere. So it's more than likely going to go into riskier assets like equity markets. So let's take a look at Euro US dollar, and not expecting to see a lot here, given that we're not really getting much movement in in the dollar itself. And again, we can see prices have stalled at these resistance levels at 110.12. And while that continues to be the case, there is potential maybe for a pullback towards the lower end of this bullish channel. But in recent sessions, prices have been very range bound and not really moved anywhere at all. So remaining vigilant there. I think my preference still is for a bit of a corrective move to the downside in the short term. With regards to cable, we saw a breakout on the 4th of April. We expected from that point prices to continue moving to the upside, but that hasn't quite been the case. In fact, prices have been very range bound, potentially forming now a double top. We've got a neckline in place here at 123.44. We can see this a little easier on the intraday charts. Let's just bring that up. So this is the hourly chart, and looking at a bit of a double top here, something along these lines here. So we've got the first top here on the 4th of April, then the second one between kind of the 13th to the 14th. And we've got the neckline that will come in at this 123.44 level. So a breakdown below there would confirm a short-term double top, and we can maybe start thinking about lower prices in cable. And again, that would be kind of in line with his thoughts that maybe the dollar index is due a bit of a corrective bounce. So it looks as though the yen currencies are getting a bit of a slapping this morning. I was looking around for some news, and they had a financial stability report that was due out today. And ultimately, they suggested that their banking situation is pretty stable compared to what we've seen with the likes of the US markets and the US banks. But inflation numbers still coming in pretty hot. So we're seeing some pretty lumpy moves here. So we can see Aussie yen down by 0.92%. So some strength being seen in the yen. We can see a really big reversal here into a 61.8% fib level. Yesterday we posted a bit of a doji candle, and the prices have started to reverse. Ultimately, looks as though we're in a downtrend here. Prices have been pretty choppy. I'm still kind of interested in this head and shoulders top pattern over to the left hand side of the chart, which if it does eventually go on to play out, could suggest much further downside on Aussie yen. I think the measured move target, I may have deleted that from my charts, is down here at 83.07. So still looking for downside there. Looking at euro yen, that's down by 0.4%. We can see that prices have rallied pretty substantially following the breakout of this short-term downtrend. I don't know why I've got that arrow on there, but we're coming up just shy of these previous highs on euro yen. So prices stalling into there, a bit of a pullback today. We'd expect prices to at least give this kind of area of previous resistance, which should be now support, a bit of a test in the short term. We can see sterling yen. That's rallied into this level that we highlighted yesterday, this 167.61 level. We stalled at that level in the last couple of sessions and now looking to move to the downside. So potential for a bit of a correction here as well in the short term. One of the requests I've had today is to take a look at New Zealand dollar versus the Japanese yen. And this one is a little bit easier to understand because we can see that prices here have been trapped by this downtrend resistance level. Each time we've approached this level, prices have stalled. We can see yesterday that we posted a bearish engulfing candle following the rejection at that downtrend level, and prices have continued to move to the downside. So in the short term, we may be finding some support here at these previous lows from the 7th of April. But it's ultimately looking pretty bearish. Obviously, a big range in play here. So a move down to the lower end of this range in this region here between 80.57 to 81.03 for me now looks like the most likely scenario. So looking for further downside there in New Zealand dollar versus Japanese yen. I think I'll leave it there on the currencies unless there are any other requests. I can't see any coming in. So there is a request actually for the S&P 500. So Steve, good chance for me to throw it over to you to take a look at these indices.
Yeah, sure. I'll start off with S&P 500 as someone has kindly asked to for me to look at an index. Doesn't seem like it seems people are more interested in FX, Joe. I think I've got the sort of like wrong end of the front end of the stick. Anyway, let's take a look at this. Let's start with a weekly chart on S&P, and we highlighted quite a while ago this downward this bearish channel basically after hitting the highs at the start of January 22, all the way up at 4,820. Now we can pick up a few multiple touch points on this to the start of this year, the week of this year, where we had that rally in January all the way up, and we stalled. We've started the channel from there, bearish channel, and it hooks up quite nicely to the swing lows as well from June last year and October last year. Over the last few weeks, we've broken above the channel. It wasn't a real strong break. It was a little bit of an indecisive one. However, we did extend higher the week of the 10th of April. But this week, we've given up some of those gains after posting a new high. So could be quite an interesting day, especially if we do get a little bit of weakness into the close. If we can manage to engulf last week's price action, that should set us off on a bit of a negative path towards next week. I know you know I'm the sort of like indice bear. So let's look at the what we've got going on the daily chart. So a different picture on the daily chart. Let me just get rid of a few of these lines. Sorry, it's a little bit messy. It's a bit distracting for me. Here we go. This is a bit cleaner. So we've got this bullish channel which started 13th of March. Multiple touch points on the downside, a couple of touch points, well, 3 touch points on the upside as well. So really strong channel, and that we've stalled at 4,175. So that swing low. We talked about this during the week as well. Joe, you mentioned this S&P, or no, it was a Nasdaq, was one of them, and we talked about it stalling. Eurostox was it? Yeah. So we could sort of, if we jump to Eurostox, we may have seen the sort of like same thing.
Yep, there it is.
That was a bit further back. So yeah, for the S&Ps, this is technically traded really nicely. From there, you've got a great opportunity for a contra trend risk reward trade idea. The doji candles running up to it highlighted a sign of indecision, and again the week the day after. So this week overall has been a pretty decent reversal sign. We've got that like 9-bar moving average again, which we've broken through yesterday. But the yesterday's candle for me is pretty important. We've taken out, it's the lowest we've closed in a week, so since last Thursday. And we've also broken down below the channel, so that's quite significant. So again, potential for another attempt. We may take another attempt at fading these indices and going for a really short-term turn on this. So for me, S&P's bearish. Look at the 4-hour chart as well, which I always do. The cloud, obviously that's a short-term upward trend. We can see we're challenging that at the moment. A break of yesterday's late evening candle, where we got down to 4,115. So really look at that as the level 4,115. If we manage to break there, then wouldn't be surprised if we get quite a nice smooth continuation lower.
Yeah.
And obviously on the hourly chart, looking pretty bearish. It's ultra short term. We are in a bearish trend. This is governed by the Ichimoku cloud. Yeah, so does
Nikkei
feel
looks
like
quite interesting, Steve. I don't know if you want to take a quick look at that. I mean, I've sliced through a bit of price action, but if you look at the daily and scroll back a bit, you can back to that high on the 29th of March. If you were to draw a line at that point,
29th of March. Which year?
22. Sorry.
Yeah, see here. Yeah, I mean we did. Yeah,
pretty significant. I know we've
cut
had a little
through it.
look above
Yeah,
it, but
yeah.
it's clearly a big area there. And
Yeah.
obviously, if you draw up the lows from May 2022, you kind of got a bit of a big range in place there, a bit higher up.
Oh,
Steve.
yeah.
Higher up.
I'll leave that little daddy there.
Yeah.
Somewhere like that, yeah.
Yeah.
I mean, we could look at a few indicators, maybe like some sort of momentum indicators. I like to look at the MACD. Where's the MACD gone? Oh, it's hidden. We've hidden it. So if we look at that,
Divergence.
yeah, a bit of divergence there. We can see. You can take it from the actual crossover lines or the histogram itself. So yeah, overall, yeah, it does feel like we've sort of like gone nowhere, and momentum is like slowing down dramatically. So let's flip that back, and we can see the same sort of divergence, and even on the histogram as well. It's there where prices have moved up and momentum has gone down, so indicating bearish divergence. So I'm, me, I'm always looking for the nasty one.
Yeah.
The nasty turnaround, but they don't seem to last long, Joe. There always seems to be
don't.
someone coming in and throwing a few quid, pressing a little button, throwing a few more quid at it to kick the can down the road a little bit further. But overall, my feel is that we are due a bigger correction, and it will be a very volatile, sharp one. But the timing of it is pretty much anyone's guess.
Yeah, for sure. Just want to come back to New Zealand dollar. New Zealand dollar versus US dollar, because we've had a request to take a look at this. So this, for me, breaking down from a wedge here, and I kind of highlighted this at the time on the 7th or 10th of March, we saw that, but then we saw this big reversal to the upside, then a pretty big reversal back down, making kind of a new relative low here on New Zealand dollar, US dollar, potentially a double top. Ideally, the neckline of that would have been broken here at 61.91. We would have seen a breakdown through that, then a retest, then a continuation lower. But prices have been very choppy, and we saw this kind of corrective wedge form. So for me, still looks pretty negative. Still looking for lower prices here. We're testing a 38.2% fib level at the moment, but for me, this looks bearish, and lower prices can be expected down to this kind of region here. That's where I'd be targeting anyway, 59.03 to 58.68 on New Zealand dollar versus US dollar. Longer term potential that it is kind of trying to form a bottom, but it looks for me in the short term at least as though it's going to continue correcting lower. These commodity currencies are struggling against the US dollar, and US dollar hasn't really done anything particularly great of late. In fact, it's been pretty bearish, but the fact that this is still moving lower suggests that if the dollar is going to rise, this is going to be the one that's going to collapse pretty quickly. This and maybe the Aussie dollar as well. So because they're the relative underperformers against the US dollar. So hopefully that's useful.
Yeah, nice one, Joe.
Okay, let's take a look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream, and a couple of rules that we need to adhere to. Obviously, we must have stops and targets. That's a given on any trade idea that we place. Risk reward ratios must be better than 2 to 1. That means that even with lower win rates, we can continue to make profits because we're looking to make much bigger wins than what the amount of money that we're putting at risk. These trades close at 9 p.m. unless the stops or the targets are hit, and when we are trading these ideas, our money management is very important, and we're only risking 1% of capital per trade. So even if we do go on prolonged runs of losses, we shouldn't be making too much of a dent in the overall account. So yesterday we both looked at trades on indices. I was looking at Euro Stocks 50. There was a really nice break of the short-term trend here on the hourly chart, potentially some topping kind of formations taking place here as well. If we click the play button, we can see that it worked out quite nicely initially, moving towards that target before then a sharp reversal around 1 o'clock in the afternoon. Now at 9 o'clock, I was offside, only slightly actually. It was only down by 0.11 R. So, pretty flat overall, but sadly does go down as a losing trade. Steve was looking at the Nasdaq, was it yesterday? Yeah, Nasdaq, and you got stopped on that, I think, didn't you?
Yeah, I got stopped out on that.
Pretty choppy stuff here at the minute on the indices. We can see here that there's a decent kind of range bound bit of price action here, and I think Steve rightly highlighted that this was looking bearish and it was starting to break down. But if we click the play button, we can see that nasty move to the upside again, triggered around 1 o'clock in the afternoon. Things started to really get going, but it's now back down to close to the lows of the session it got to yesterday, which is frustrating. That's trading, everybody.
It certainly is.
Right, let's pick some new ones. What you got? Anything?
Yeah, you know what? I'm going to go for WTI crude oil again. Its main reason is it's filling that gap. On the Oanda chart, you don't see it as well because, as I said, some brokers fill that gap for you. But Friday's price action here closed at, where did we close? Well, the high was 75.60, so I expect us to get down there. We're breaking lower this morning. It's obviously high risk reward with 4-hour chart and the hourly chart both below the cloud, so quite like that. And this was my first attempt. That was Tuesday. I'm going to go again. It feels like so wrong selling it all the way down here when I already sold it once this week up there, but the stop was too tight on it, so you pay the price. So I'm going to set up a short position here. Again, I'm going to have the stop pretty tight. I'm going to try and see if I can get away with this one. Targeting a move to 75.60. Does that look right? Yeah, why not? Should really give it a bit more room then, Stevie boy. So I'm getting short at 76.94. Stop at 77.10 is way too close. Yeah, that'll do, Donkey. I'm going to put the stop at 77.44. It gives me a 2.7 risk reward on this trade idea, targeting a move to 75.59.40. So leave it like that. I'm going to show that it's there. I'm going to get the trade idea up here. I'm going to sell at market, take profit, stop loss. I want to risk 1%. My stop loss is at 77, and my target is at 75. 59.40, 2.3, risky 90.2. It's 2.3, 2.39 to 1, just as I put the trade on. So, yeah, that'll do, Donkey.
Okay, best of luck, Steve. I think I'm going to take a look at buying US dollar in some form, just because I've been talking about it. That is my bias. I know it's speculative because we haven't quite seen that break from the wedge yet on the daily chart for the dollar. But we've got these PMI data points due out today. We've already seen a big move to the Japanese yen today, which indicates a bit of safe haven buying. Are we going to see the same thing with the US dollar? So I'm actually looking at both of them together. So I'm looking at owning US dollar over Japanese yen. Although Japanese yen has had a decent move, I still think that the dollar remains the dominant player when it comes to safe haven trading. So looking at the hourly chart here, we can see that there's been a nice uptick in the candle over the last hour. So maybe that's a turning point that's going to suggest we're going to see a move to the upside. On the hourly chart, we can see that there is a decent uptrend trying to form here. The pullback that we've seen in recent hours has found some support around this level here, posted this kind of reversal between 7 and 8 a.m. and now trying to push to the upside. So I'm going to buy dollar yen at market, Steve, with a stop loss. Obviously, we need that in order to give us the trade size. I'm going to go reasonably tight here at 133.60.
I already had that in, Joe. That's amazing.
Did you?
Yeah, I did. Yeah, that's
okay.
pretty. Look, you can flip to my chart, so I'm not lying. Look over here, 133.60.
Yeah, let's go with it then. And I'm going to
Spooky.
target a move back to these highs that we posted on Wednesday at 135.13, giving me a risk reward ratio of 2.32 to 1.
There we go. Trade is on, mate. It's all set. Ready
Yeah, I
to
mean,
rock and roll.
scrolling further back on here, maybe there is some nice technical sort of patterns, maybe a head and shoulders here. Let's have a quick look. Something maybe along those lines. Well, that would suggest we actually haven't broken the neckline yet. That's an upward sloping trend line, or neckline, sorry. So yeah, if we do get to my target and break through those highs that we posted on Wednesday, then that would maybe confirm that bottom pattern and we can start looking for higher prices there.
Nice.
That'll do. Okay, let's see how it goes. So both those trades are on. If we can see it on Steve's panel there. So yeah, we can see on the live account, Awanda Live, we've got a dollar yen position and a oil position there. Steve short, I'm long. Both offside at the minute, just paying the entrance fee on those. Let's see how they go. Okay, data-wise today, let's have a look at what's happening. So it's all about these Eurozone PMIs. We've got Eurozone at 9 o'clock. So only got 24 minutes to wait for the first bout of PMI data. Shortly after that, we've got the UK PMI data. And then at 2:45 this afternoon, we've got the US PMI data. So this will be pretty important information that the market will be digesting. It's going to be, all data points being considered at the moment when it comes to monetary policy. So let's see what these numbers have to say. Next week, we've got US GDP and we've got a Bank of Japan policy decision. And also there is lots of earnings happening as well. So we need to be aware of that. Right, let's leave it there, Steve. We hope everybody's had a fantastic week trading. It's been a challenge for sure. But there's always next week. Just be careful with your money management. Give yourself a chance of staying in the game wherever you can. And yeah, we'll catch you all again next time.
Cheers all.
Bye.